Good morning, good afternoon, everyone. Welcome to another brand new video. Today, we're going to talk about a new way of investing, one that many people aren't talking about and one you should take advantage of. This is probably a great investment even during times of recessions, talks, depressions, or whatever it might be. This might be a great investment for you. So stick around and learn how to invest in this new method. Give it a try in a couple months. Let me know what you think about it in the comments below. Share this video with your friends. Make sure to hit the subscribe button. Drop a like if you learned something new. And if you're going to give this new investment a try. So here's some facts about tax liens and real estate taxes. In the United States, an estimated $21 billion of real estate properties taxes become delinquent annually. Approximately $4 billion to $6 billion in unpaid property taxes are offered for sale to private sectors each year. Currently, 28 states and territories allow for the transfer or assignment of delinquent real estate tax liens to private sectors. Then there's 22 states that do not allow transfer or assignment delinquents. And here they are. So here are tax deed states. So you can pause the video and take a look at them at your own pace, at your own time. Here's the population by each state. So in tax deed states, investors purchase the tax deeds to own the properties. Some real estate investors purchase the tax deeds later to use the properties to earn income. Now these are the tax lien states, the ones in purple. So tax liens take priority over anything else. Next comes the mortgage lien, but tax lien is number one priority. Now the amazing thing about tax liens are the certificates usually start at a high interest rate and a high percentage of returns, and they are solid government-backed investments. And they also are real estate investments. So you're getting the best of both worlds. In Florida, the interest rate is bid down at reverse auction. With over-the-counter tax liens, there's a way to assure the 18% rate though. Now there's a couple amazing places you can find these tax lien certificates, and where you can get them and where you can view them is your newspaper or the county office. Now tax liens can be very safe investment with great returns. All you have to do is do a little bit of research here and there and go to the county office and do a little bit more research, and you can get these amazing certificates with great returns. Now they can't be possible sell all 1 million tax lien certificates that are available for purchase in Florida alone. As a result, you may go to the county and pick them up without facing any competition because they are sold over the counter. The price of the certifications or certificate. The price of the certification for tax liens varies. They were available for $50, $500, or $5,000. Everyone can find something and purchase items. Doesn't require a large sum of money. Just think about it. You can start as little as $50. Imagine all the returns you can get with all the different tax liens that are available to you. Florida tax lien certificates are an investment that yields a high rate of interest passively, and if they default, you end up owning that property, by the way. As long as you know what you're doing, you can't lose either way. It's a win-win situation for you. How do tax lien certificates work? When a homeowner falls behind on their property taxes, the county or the municipality where the property is located can place a tax lien against the property. Then the lien certificate can be purchased by an investor in a public auction. Bid winners pay the tax office the amount of tax owed on the certificate, then assume the right to collect that amount of money back from the homeowner along with interest. The local municipality creates a tax lien certificate. Local governments charge property tax to help fund government programs and services. If a homeowner fails to pay their property tax bill, the local government places a lien, creates a tax certificate lien, or a tax lien certificate, and this certificate includes information such as the amount of tax due, as well as interest or penalties due on it. If the property owner still doesn't pay their tax bill with the interest, then the government has the right to foreclose on the home. Then the tax lien certificate is put up for auction. In 28 states, the government can sell the tax lien certificates to private investors, which allows them to recoup their losses more quickly. This sales usually happens at a tax lien auction, where the certificate goes to the best bidder. Investors bid on the tax lien certificates. Depending on the auction, bids may be based on either cash amount someone is willing to pay for the certificate or the interest rate they're willing to accept. In the case of cash offers, a certificate goes to the higher bidder. In case of the interest rate, it goes to the lowest bidder. Keep in mind that the lower the interest rate you bid on a tax lien certificate, the lower the profit you could potentially receive. Bidding wars on tax lien can drive the interest rate, therefore the profit down. Winning investor takes control of the property. The winning bidder of the tax lien auction takes ownership of the tax lien certificate. This doesn't technically give them ownership of the property, but it gives them the right to take ownership of the property through foreclosure or be paid back when the homeowner eventually pays their tax bill. So if you do get the tax lien certificate, it's a win-win situation. You get the interest rate, or you might end up with the property. Investors pay the amount of tax owed. When you win the tax lien auction, you immediately are responsible for paying the tax bill, including any interest or fees owed. Then the homeowner has a certain period of time before the redemption period deadline, by which time they must pay the new investor or risk foreclosure. And now the last thing, repayment or foreclosure. When you purchase a tax lien certificate, there are two potential outcomes. Either the homeowner will pay you their property taxes, or they won't. If the homeowner pays their property taxes, then you make your initial investment plus the interest rate you bid at the auction. If the homeowner doesn't pay their property tax, then you have the right to begin the foreclosure process. Depending on the state, there may be an expiration date which requires you to initiate foreclosure within a certain amount of time after buying the tax lien. If you fail to take action, you may lose your right to collect your investment. It is important to know that it is quite rare for this situation to get that far. Majority of homeowners will pay their tax lien before foreclosure process begins. Now let's go over the pros and cons of tax lien investing. The pros are the interest rate returns, and the initial investment can be passive. The cons of investing in tax liens is it does require research and preparation, time consuming. The cons of tax lien investing is it requires research and preparation. It is time consuming responsibilities. There are dates and expiration dates you have to keep track of. There are some times where people neglect properties, and there's competition sometimes. So tax deed investments works pretty similar to tax liens. When the property taxes are arrears, tax deed investments, they are pretty similar to tax lien investment. When property taxes are arrears, with one critical exception, the government or municipality takes immediate ownership of the property. Tax deeds are then sold at auction. The investor with the highest bid wins ownership of the property. The investor can rehab and flip the property, rent it out, or sell it for a quick return. Tax deeds have the potential to garner quick and desirable returns under the right circumstances. How can you invest in a tax lien? The process of investing in a tax lien might seem simple, but it is actually a lot of hard work and preparation and research required for it. First, you want to find a state or jurisdiction. Find a state and jurisdiction that auctions tax lien certificates. You want to look around for auctions. They can be online or in person. Attend and try to win the auction on a tax lien certificate. You want to research in advance to ensure that there are tax liens worth bidding on. Next, you want to attend and try to win the auction for the tax lien certificate. You want to research in advance to ensure that there is tax liens worth bidding on. Win the tax lien certificate. Win a tax lien certificate. The certificate will typically be sold by the cash amount an investor is willing to pay for the certificate, or the interest rate that they accept. The certificate goes to whoever is willing to pay the amount in cash or willing to accept the lowest interest rate. Pay the unpaid taxes and other fees to obtain the tax lien certificate. You have to cover the taxes and interest immediately to the certificate. You're purchasing this debt and the fees associated with it. Wait to see if the homeowner will redeem the tax lien certificate. If the homeowner doesn't pay the debt off, you must go forward with the foreclosure process. Now here's an example of a tax deed. A tax lien certificate could also lead to a bigger investment return. The taxpayer is given a specific amount of time to pay off the tax lien certificate. If they don't pay off this debt, the investor obtains the deed to the property, and you could become the owner of that property, believe it or not. And you could turn around and sell it or rent it out. The decision is really in your hands after that. We suggest that you make time to learn about the property and its jurisdiction to know what you're investing in. Do this research in advance to know what you're signing up for before attending any auctions. You don't want to waste your time investing in something that you don't want. Is tax lien investing risky? Well, anything considered investing in is always has some kind of risk. But since you actually don't own the property, you don't have to worry about maintaining or dealing with tenants. On the flip side, you risk the debt of not being paid back. You may have to factor the risk involved with the homeowner declaring bankruptcy. When the property owner is in bankruptcy, the IRS and other creditors could get involved if they have claims on the property. Your tax lien would then be useless, as other creditors will pay back before you. You must work with real estate lawyers to get to know as much as possible about the local laws in your state. Every state is different and has different laws when it comes to tax lien certificates. What steps you should follow from the moment that you purchase the debt. Tax collecting jurisdiction, typically the county, and your investment is backed by real estate. Now, some of you might be asking, what are tax deed states? Well, here are all the tax deed states